Hey, Wealth Press traders, viewers, investors, welcome to another midweek update with Lance Ippolito. Lance, how are you doing?
Good. Just trading this choppy market.
Yeah, so Lance, we were talking before the camera rolled here about the effect of the masses in the option market now and how they are causing the value of options to inflate beyond all reason before cashing out ahead of the herd and basically conducting a hit and run style of options trading that's leaving pro traders frustrated. Tell us about what's happening and how that's possible today versus back in the day.
So back in the day, if I saw like an order, let's say it was 150 or 200 grand in a trade, that would be a significant move. And let's say a stock, and we'll use for this example, we'll use a stock like AAL, for example, American Airlines. And you would see an order like that and be like, wow, someone's putting 200 grand down that AAL will be, let's say, above X amount by November expiration. So it'd be a good order. And, I would go and follow it and, usually write it like they did. It was easy to track, put it that way. Because I know, a large trader, probably an institutional trader, was putting 200K down on that stock, and I can just track the options. And when they sell, I can sell. And, if the stock was up, I could take profit, such like that. But nowadays, with the popularity of options trading, and now, like you were talking about, how your 18-year-old nephew has a Robinhood account with a Facebook group with, how many thousand did you say? A few thousand followers. That one of those Facebook groups can go and say, hey, I like this stock XYZ. I'm buying these options. And next thing you know, from that one group, that 2,000 lot or 1,000 lots coming in, and it looks like a big institutional order, but really it's just 18-year-olds in a Facebook group buying options all in the same stock and strike. And obviously they're not smart money. They're not institutional traders. So it's very odd right now to distinguish these orders because, anyone out there with a six-figure account now can make believe like they're a big institutional trader out there. So it's hard to read because even trying to break down the smaller lots, you don't know if it's a big player or, like we were talking about, some newsletter or some Facebook group now buying the options in the stock.
Yeah. Interesting. So then it sounds like these young traders are starting to sort of front run the market. They're not making informed bets on a company's future value so much as they are on a coordinated basis, driving the option price higher, not even concerned with what the future of the company holds. They are executing on a strategy that has nothing to do with what the company's doing. It's basically the combined effort of a small group of not necessarily informed investors, but certainly dexterous and ballsy young traders.
Yeah, and I'm noticing too, they'll be in and out the options either intraday or the next day, and they're not buying like high delta expensive options like an institutional trader would. They're not going out buying like PayPal call options that are, let's say, $8 or $9, that are in the money. They're going out in these piece of junk companies, to put it lightly, names like Kodak or Valet or Cliff. Well, those stocks, maybe I shouldn't classify them with Kodak, or GoPro or GameStop. These companies that are like, near bankrupt, high short interest and such. And they're buying like the weekly out the money options that are super, super cheap because, those cheap options, it's easier for an option to go from 10 cents to 20 cents than it is to go from $10 to $20. And obviously they can buy more size of the cheap options, and they're very more sensitive to the option Greeks out there. So Yeah, they don't care. You would think, they buy a in the money call or at the money call, something with a higher probability, but no, they'll just go target some cheap out the money weekly option and see if they could flip their money, in a day or two. It's really, really crazy.
Right. So does this make the whole options trade uh, more difficult to profit from for a pro trader? And is it more risky now with such uninformed money sloshing around, driving prices hither and thither?
Uh, it, for me, it's taking a little bit to adjust to. Really ever since I would say April, it's really picked up. Obviously, with a lot of people since the pandemic staying at home, and then a lot of option trading has really exploded. But for me, I have to be very, very selective now. Um, and before, I would go out and just, all right, it's Thursday. Let me buy some weekly options, see if I could double or triple my money for expiration the next day. Now it's like there's so many orders per day that you really have to narrow it down, be selective, and and hope that it's actually a real order and they're not closing it by end of the day, not some group of Facebook traders, put it that way. Like, to give you an example, I get text messages from traders I know from 5 years back that trade full time, and they'll text me and be like, "Hey, is this stock XYZ is the order flow real, or is it some recommendation or newsletter or chat room?" And we'll go back and forth and be like, can you find anything? Have you asked around? Stuff like that. Or is it, a big institutional trader or some fund out there that is making a real solid bet on the stock?
Mm. And so, to what extent is that kind of order flow monitored or regulated by the SEC?
That's a good question. Like, I don't know that answer, but you know, I don't think it's anything illegal or anything like that, because you have to figure, even the big banks, like, to give you an example, Goldman Sachs came out this morning with a downgrade on Peloton. Well, about 10 minutes before the close yesterday, someone bought 500 Peloton weekly puts, about the at the money weekly puts, and they spent about 50 grand on that trade of put premium. And then earlier in the week, they bought some more weekly puts, a little higher delta. It was over a 6-figure trade. So, will we go to Goldman Sachs and say, "Hey, you bought puts," or some trader in the know bought puts ahead of a big downgrade that you guys did? Is that, anything fishy about that? I mean, yeah, it's fishy, but at the same time, it happens, pretty much every day. So
So,
I don't,
insider trading, could you say that it's rampant in the options market?
um, I would, yeah, I would say, it's nothing new though. It happens all the time, and uh, I think as long as we allow the big banks and the analysts to come out with um, upgrades and downgrades and disclose positions, it's going to continue. I mean, we don't see, you see that though with 13F filings. You see that with big short sellers or big firms out there, or people will go on the financial media and say, "Hey, I really like this stock," and disclose a position. And, a day or a week later, they bought calls on it. Um, I mean, really, there's nothing illegal about that. If you're a fund, you can go and buy call options, or if you're a research firm, you could buy call options, and then you just now have the mass media who's going to give you exposure to state your thesis. And if they like it and the stock goes up, hey, you make money. I mean, technically, yeah, it's a gray area, but nothing's really wrong about that.
Huh. So then, is it uh, is it uh, is it in your interest to sort of participate in that Wild West environment more than it is to, just to try to sort of avoid that kind of action?
I don't think you can avoid it. Because as long as
In every
as
name?
long, pardon me.
Is it in every name?
I would say so, yeah. As long as there's analyst coverage and there's financial media and there's news feeds, you're always going to have, exposure out there. I will say in a trending market, it's a lot easier to swing trade because, let's say the overall markets are going up and individual stocks will go up, and you can actually build a position and ride that momentum. When the markets are choppy like they are here, like all this week, it's just been stimulus chatter back and forth where you had crazy intraday moves. It's a lot harder because as the overall market, let's say the NASDAQ starts selling off, pretty much, every stock in it's going to sell off, or the S&P, a majority of stocks are going to sell off with the indexes or have that kind of choppy momentum. So being very selective at a time like now is good, or to be honest, just, leaving the afternoon session and just, going out on the boat or going to grab lunch or something is actually a pretty good strategy right now.
Right. Right. So I guess that unsophisticated crowd also is not really affected by the aspects of the market, like uncertainty around the election. Like they're just not even following that. They're just in
Right.
there looking for opportunities, ganging up on stocks, taking them higher, blowing them out at the end of the day, and riding off into the sunset with a bag of cash.
Yeah, exactly. Like they're not doing it, in like home builders or materials or utility stocks or anything like that. That are going to be affected by economic data, numbers, and stuff like that. They're doing it on, these high flyers that are just pure momentum, speculative names. Like to give you an example, names like Tilray, names like Twitter, names like AAL, Smiles Direct, usually right around that like $10 level stock, $10, $15 level stock, where they can really get the crowd behind it, and names that don't trade 50 million shares a day and such like that, or trade 100,000 options a day. They're definitely going for the lower price names that are more sensitive, so to speak, in the options market.
Okay, so finally, what advice do you have for people who want to trade options that might be misled by outsized order flow in names where there is no reason to really justify a large put position or a large call position on a near dated option trade?
Yeah, I think the best advice would be look at orders that are over $500,000. Like you really have to scale up now because there is so much money in the market, and then look for options that are either in the money or at the money and that have time on them. Like for example, a big fund's not going to buy weekly call options on a stock. That would be a little bit of a red flag. So like right now we have October 23rd expirations tomorrow. Look for like December or January positions when they hit, because then someone's actually buying time, and the options are going to be more expensive than your like 20-cent options and such like that. And a group of Facebook Robinhood traders are not going to go out and buy January in the money call options that are like $4 or something. They don't mess around with stuff like that. So definitely be selective, look for a high dollar amount, and look for time on your positions, especially if you're swing trading. Those weekly options and short dated options, they're going to be so sensitive with every movement of the stock. That's how you really get chopped up.
Right. All right, Lance, let's leave it there for this week. Thanks very much for joining us. We'll come back to you soon. Have a great day.
You as well. Thank you.